A lot of multifamily investors fell into that trap where you bought a property on a bridge loan. The goal was to do some capex, refinance it out. Rates doubled. So a lot of people struggled. The sellers became the bank and did owner financing.
In today's episode, what if building your portfolio wasn't about more deals, but better structure, smarter leverage, and spreading risk across the right assets? Hello, everyone, and welcome back to the Freedom Blueprint. I'm Adrienne Green, and today we are here with Fuquan Bilal. Here, we focus on how real estate entrepreneurs break free of the grind using leverage, support, and smarter strategies. So let's jump in and see how Fuquan's done it himself. So, to start, can you give us a quick snapshot of what you focus on in real estate today?
Yeah, well, we have two strategies that we focus on. One is a rental strategy, which is multifamilies that we acquire in the Southeast, primarily Alabama and Georgia, anywhere from 40 to 150 units. And then in New Jersey, where I've been investing for the last 27 years, we do luxury spec homes that we build from the ground. We build an addition and put those back on the market to quickly sell. So those are the two verticals that we raise capital for, and that's our business model is real estate asset management.
Perfect. Thank you. That's a great description of it. Now, my understanding is that you focus on some underperforming real estate assets. What do you think investors maybe misunderstand about this part of the market?
Well, I mean, that's where the deepest discount is at, right? If you want to get higher returns, you have to roll in the mud, as they say. So, those are the assets that have the biggest discounts. And that's kind of where I got my start investing in those types of assets and developing relationships throughout my journey. So I think that it's more work, a bigger return, more work. It just depends on which your capacity is and your business model. Everybody has a different buy box and different business model.
Right. And I think what I see a lot with investors is they want that higher return, but they don't realize, like, I love the way you said it, that they have to kind of roll in the mud, right? You're not going to get that higher return
You gotta
without,
roll in the mud.
yeah, without costing something else in some sense, right? Of getting a little dirty. So I love that. Now, obviously, we deal with leverage a lot as real estate investors, as real estate entrepreneurs, and leverage can be this amazing, powerful multiplier. Or, as we've seen in the last few years, it can get some people in trouble. So I'd love to hear your thoughts on good leverage and how to use leverage well.
So that is good, actually. It just depends on, like you just said, how you use it and what your capital stack looks like. And you have to leave meat on the bone for the next buyer and also for your investors. You have to have some risk adjusted type of underwriting when you do that. A lot of people misuse it. You look at short term debt, a lot of multifamily investors fell into that trap where you bought a property on a bridge loan. The goal was to do some capex, refinance it out, rates doubled. So a lot of people struggled, and that was because the capital stacks that were in place, mezzanine and everything else, wasn't structured properly. And those are the operators that you see having challenges. I mean, it's a challenging market for everyone who's playing in that space, but more pain points are from the broken capital stacks and people not using leverage responsibly. But leverage is good if you use it responsibly.
Right. And I think that was probably the most like concise description of what's happened in multifamily over the last couple of years in terms of debt. I loved it. And really, you just got to exactly what the issue was with the capital stack. What do you like to do in terms of your own capital stack to avoid issues like that? Specifically, if we're talking about this multifamily asset class.
Well, it's the cost of capital is what drive the bus. So what we've done is we've actually the sellers became the bank and did owner financing. We purchased subject to make sure we had that existing low interest rate of debt for a long term. So when we are doing our capex, we have a low cost of debt for at least 5 years straight with the Fannie Freddie lender or CMBS lender that, have rates less than 5.5% or whatever. So finding those deals are great because you can assume the loan and take over that way. And then also what we've done is we've created our own mezzanine fund, right? So you go to a third party lender, you're going to pay 15% for mezzanine financing or more, right? Because it's short term, 2 years, 15%. They want part of the GP. They want to see that at the dinner table. What I decided to do was create our own mezz fund and raise capital cheaper and gives investors preference over common equities. Those are some of the things that we've done to control the cost of capital because that's what drives the bus.
I love it. You're living, I think, a lot of investors' dream. You say how you're getting seller financing, you're getting
It's
subject
not
to.
perfect. You have to go through pain points to really understand how to structure that. Multifamily is a tough business. There is light at the end of the tunnel. Some things are systemic that you can't control, like insurance costs doubling, tenant wars, using as many amenities as weapons, sessions, battling what the other operators think can, hurt also on lease renewals. So you have other pain points that you have to address, so it's not a perfect world. It's a perfect storm, but you just have to learn how to navigate the narrows to get through it, right?
Right. Well, and what I love is you're really being active about controlling what you can, even if it means you got to work harder, right? To find like those better deals or to set up that mezzanine financing like you did. Now, I want to dive into how you have these two different investments that you do, right? You've spread your interests, your capital, your across these two very distinct asset classes. How should investors think about diversification as they start to scale their own properties and maybe are thinking about diversifying from maybe one city or one asset class? What are your pro tips on diversification from all your years of experience?
Well, what I see is I do research and see what the high net worth individuals, what strategies do they, execute on. There's a group called Tiger 21. I don't know if you've heard of them. People do traditionals, people do alts. And when you look at their blended portfolio, you see more towards the alts. You have private equity funds for income coming in on a monthly basis, a quarterly basis, precious metal. It's a spread, right? Stocks also, bonds, but more so alternative assets. Diversification, bottom line, is good. Even if you're diversifying with another asset class, some people start off traditional with stocks, day trading, and then they start to blend real estate in their portfolio. But you can be a investor into a fund or do short-term notes, different things that you can invest into real estate that can kind of give you a return uh, a higher yield and also give you that diversity.
What prompted you to choose the two asset classes that you invest in?
Well, I started in '99 doing fix and flips. So I've been in my own backyard for 27 years. The multifamily for me was something that happened after COVID because we manage rentals here in New Jersey. Part of our impact project going to low income areas. I come from those type of areas. So revitalizing those dilapidated properties. We did a lot of that in New Jersey. And basically after COVID, Jersey is a blue state. So it was a lot of tenant games. We just decided to divest that portfolio. We had a lot of New Yorkers coming over. Things were selling 30% over list price. So we just took the war chest to the southeast after we divested that portfolio and started doing bigger buildings in red states where we can do our impact on a larger scale. Same type of areas that we were investing in Jersey, low income areas, battered women and children. Things can't afford a bump. You have C plus B minus properties based off of age and area, of course, age of the property and area. It's affordable housing is really what the goal is. So that's why we kind of took that to the southeast and we kept the strategy of the flips here and we moved to the higher tier, which was the luxury spec homes, because we were doing a lot of affordable home flips to COVID was a pivot to kind of split that those two verticals to kind of get a higher yield or diversification, not only asset class wide, statewide, right? So
Yeah, in terms of like asset class, you had really mastered this, low income, affordable housing, multifamily. And you, in terms of location, geography, you'd really mastered New Jersey. And so you were able to say, okay, let's diversify, let's split that, let's take the asset class we know into a new area. And then let's do a new asset class of this, higher end luxury flips within the geography that we've already mastered. That's kind of cool.
correct.
Love it. Now, we've talked a lot about risk, right? And capital stack and things like that. And you're evaluating an opportunity, right? Let's say either multifamily or, this ground up construction, a new purchase. What risks are you really focusing on that you maybe think new investors often overlook?
I just thought of something Jim Rohn said. He said, everything is risky. Getting married is risky. Going to work is risky. Waking up is risky. Favorite quotes. Yeah, I mean, it's really, COVID taught us a lot about underwriting, stress testing, making sure that you kind of try to plan to get punched in the face, right? Mike Tyson says, everybody has a plan to get punched in the face. Setting it up there with plan C and D instead of just plan A and B. Sometimes you hit the target, sometimes you won't, right? You've been investing long enough, something is bound to go wrong, which can affect yields and return. The main thing is communication to investors immediately, loud and proud to keep them abreast of what's going on and what you're doing about it. And those are the sponsors that you see investors ride with. People have transparency and can openly share the challenges they have and what they're doing to overcome it.
I love systems, frameworks, things like that. And so I'm curious in your business, maybe if we looked at just like your acquisition decisions, right? Because you've got to have deal flow with what you're doing. What kind of systems or frameworks do you use in your acquisition part of your business so that you're not just relying on gut instinct alone?
Well, we have a SOP, first and foremost, a standard operating procedure of, how things are done from underwriting to submitting a deal to the lender for approval. It's a whole bunch of processes, SOPs on insurance. We use a lot of automations. We have some AI stuff that we've integrated over the last year that makes the work a little bit easier for the team members, like they have an assistant, stuff like that. Created bots to kind of help us do certain things. We always manually underwrite. We try to build certain things in the AI, but it hallucinates a lot, and we don't want to
Right.
take that risk of using information from AI for underwriting. What we found is it does 60% of the work for you, and you have to manually go in and finalize everything else. So it makes it easier to underwrite more deals to kind of like block out the ones that don't fit a certain criteria and just really focus on the ones that do. And basically, that's pretty much it. Just the SOP systems and processes, some AI stuff. Then also, sitting at the table with the team voting on it to make sure that everybody is in agreement with moving forward with this asset.
You say that, Fuquan, you say it so like matter of fact, right? It's like no big deal for you. We got SOPs and everybody, votes on it. Because I think you've been doing it for
Oh,
so
you're
long and
actually
you
doing
really,
what I do. Yes, I don't know what
well,
everybody else do. I mean, as a business owner, to be honest with you, I've been doing this for 27 years. These are things that I started to implement when I joined masterminds, right? And started to learn how a business operate, the four parts of a business: people, strategy, execution, cash. And you have to have rocks. If you
hmm
want your company off EOS, Gino Wickman, rocks and everything else. But you have to have goals, which are rocks: 10-year plan, 5-year plan, 1-year plan, quarterly plan, weekly huddles to get to the monthly goals, whatever it is, right? The people, strategy, execution, and cash, having goals on those four parts of the business every month will get you traction. And those
right.
part of the systems and processes, right? That's the foundation of the business. And it took me, as I was saying, a long time to learn that. Maybe after like 17 years, 18 years of doing business, I understood that you need a team, you need reliable people, you need systems, processes, SOPs. So yeah, when I first
hmm
started, first 5, 7 years of my business, I had no SOPs. I had to retrain a new hire every time they came in instead of setting up Loom videos and processes and lucid charts and all this other stuff. So but those are the foundational points that no one wants to do. But if you don't have those in your business, you got to land a plane, do it, because I was the owner building a plane while flying in the sky, and it's not fun.
Right. And that's the thing. And I love this. And it's so funny that you mentioned EOS because one of the most recent guests also mentioned EOS and it's a great system and it helps so many people. But yeah, if you're a real estate entrepreneur who's listening right now and you are still like a solopreneur and you're doing it all yourself and you have no systems and you're just like, well, I know how to do it. That's not a business yet. That's not something that can grow and can scale. And so I love Fukana. You talk about that. You talk about having the systems and the processes and everything, and you talk about having the people at the table. It's that mix of like the processes and mentioned like tech and AI. And at the end of the day, you need the people who are going to run all that, right? Because those things do not run themselves right now, like you mentioned. So I love that. If you're a real estate entrepreneur trying to scale while doing everything yourself, there's a better way. The Time and Freedom Starter Pack gives you the exact first steps to reclaim hours each week with real support, including what to hand off, where to start, and simple tools you can put into place right away. Download it for free at adriennegreen.com/starter pack. Now let's get back to the episode. That's really good. And that's what's allowing you to scale, right? And so
Correct.
as you are scaling, something that can be challenging, and I think you've already answered it with the EOS, but in case you have anything to add on this endeavor, as we're scaling, how do you ensure consistency? Because that's the tough thing is to do the job the same every time at scale.
Management accountability plan. Need it week by week. So you have your 5-year plan, 3-year plan, 1-year plan. Then you have your quarterly from your 1 year. Every quarter is a 13-week march. Your MAP, your management accountability plan, have each and every week what's going to get done by who, what, and when. Then there's a weekly meeting to review those things. Action items are created from the meetings of who, what, and when. And it's just a weekly thing till you get to the 13-week march, right?
Yep.
Red, yellow, green. If you're on track, off track, your IDS it, you use those tools from EOS to kind of help you get to those goals that you set by keeping everybody accountable, but in a 13-week March format. On a map,
Right.
we have our one-page strategic plan, and then each department have a map of what they're going to do each week to attack the deliverables to achieve the goal. to complete the rock for that quarter by
Right.
80% at least. That's the goal, right?
Yes. I love this because, guys, we can have, in the real estate entrepreneur world, we can have these people, they talk about this big vision, and that's important to have. And you mentioned that, like your 5-year vision, your 1-year vision, all of that. And then we need a plan to be like, okay, how are we going to make the progress we need to make in this quarter, in this 13 weeks, so that fast forward 1 year, 5-year, we've reached that goal. So that's the truth. And that's where the grit comes out of making and sticking and executing that plan week after week after week, right?
And then in addition, one other thing that we do is something called a 15-5. They have to answer 15 questions in 5 minutes every Friday before they leave work. And one of the questions is, what are your top 3 items for the week? And that has to be in alignment with the map. And then what did you accomplish? And basically is questions that go down and talk about those goals they set. What was accomplished? What specifically was done? They get a chance to tell you anything else I should know about, if you need any additional resources. And that's the way you can kind of manage those 13 weeks through those reports, right? If you have a team of 4 or 5, you can look at that on a treadmill and kind of give feedback each and every week. You can catch problems between team members because they'll mention it there in a 15-5. So those are really good tools and resources that we use to help keep it going. It's not perfect.
Well, nothing is, but and yet we try. So with the 15-5, they record it, and so that way you can listen to it later on?
Yeah, no, it's actually a document that we have them fill out. And basically, it's like when people survey. So like a survey.
Okay.
You can
Yep.
put it in a survey format and it's 15 questions, 5 minutes it should take them. And it's basically about their goal for the week, right? So if you have 3 deliverables, what we say is a minimum of 3 deliverables, the highest, right? Because things that matters most must never be at the mercy of things which matter least. But they set those 3 top items a week that they're going to attack. And then there's questions about those items all the way down. They could do 5, but we try to say through 3, right? So you can accomplish them and feel good about it. The dopamine rushes, you've accomplished the goal, and you go from there. But that's what that is. I'll send you a copy if you like to see the format.
Yeah, I think that'd be great. And I think, there's so much power in those routine surveys. I know that's something we do in my virtual staffing business for our virtual assistants who are working for clients. We have a survey that they do, I think it's every 2 weeks. And it's like, hey, how often have you met with your client? How are things progressing on your tasks? Like, what are challenges and everything like that? There's so much value that can be given from those routine surveys for the people in your world to really keep your finger on the pulse, I would say, of the progress that's being made and how they're feeling and what's causing trouble.
Yeah, we use the virtual staffing also. That's definitely been a game changer for us. I always say that they're the backbone of the business because a lot of things get done and you can have really whatever schedule you want, right? Sunday, Saturday, whatever,
Hmm.
nights, things, right? You can really optimize your business by using that virtual team. So that's very important.
Awesome. Now, you obviously have spent a lot of time developing your leadership capability in running this company. I'm curious, for so many leaders, they're only managing people, right? You've got to manage all the people and the properties and capital. So, what would you say for other operators who are in that same challenge in the real estate space? What are your effective leadership tips for other people in similar places, but maybe not as far as long?
Well, first of all, I mean, I have a coach that I rely on to kind of help me and keep me accountable. And you don't really have to manage all of those people, right? So the tools that you can use to manage makes it easier, like the 15-5 I just mentioned. You can really look at like 12 of those on a treadmill, walking 3 miles, right? So that you can get feedback there. Plus, some of them, it depends on how big your company is. They have department heads. I usually try to communicate just with the team leads and we help each other like a brain trust and have those level 10 meetings where we can give advice and they go back to their team members and execute. But you
Right.
can use the virtual team. You can train up somebody to kind of be like your right hand operations person and do those things. I don't know if I answered the question.
Well, you gave some good wisdom, so we'll take it. That all works. And I'm curious, you've mentioned the treadmill a couple times. Let's go there. Let's talk about it. Seems that
Yeah.
like is
I
there
I
like
have
an
I have to
aspect
walk
of
15,000 steps a day, so that's why I keep mentioning it.
so tell me about how that plays into your leadership and your work here with your capital business.
Well, for me, I like running. It's too cold in New Jersey to run, so I switch between running and walking. But That's when the juices start flowing. When I'm on a treadmill, I can read a chapter of a book that I'm reading on a treadmill and also do some tasks with my cell phone and optimize that time on the treadmill and burn calories. So I like it. It's my coffee. I don't drink coffee, but the treadmill is my one to wake me up.
Yeah, I love it. I'm in Vietnam right now because I travel internationally full time. And the Vietnamese, like, there's like the stereotypical like squat, right? That like people in other countries could do, but Americans cannot, right? Like, we cannot do like a squat very easily in terms of like squatting down because we're always sitting in chairs, right? We're always sitting in chairs and it's so bad for our hips and everything. So I love that you're doing what you can and getting on that treadmill and working from there. It's definitely better. And maybe that's somebody's takeaway. Some listeners' takeaway is, hey, can I do some of this work on the treadmill and get more steps and sit in a chair less? That'd be great. So let's talk about to the mindset shift as you went from when you started off with real estate investing to now we're managing portfolios and capitals at scale versus when you maybe started off with a few properties, a few doors, things like that. Obviously, there needs to be some organizational shifts, which we've talked about a lot with the systems and the processes and the team and everything. What about the mindset shifts that need to happen when an investor moves from solopreneur with a few doors to managing portfolios and capital at scale?
I mean, that's really self-care, right? What's your daily ritual? What are you doing to grow yourself? Your business can only grow to the extent that you do. That's Jim Rohn also. But you really have to continue to work on yourself. My rituals are meditation, your gym, reading on a daily basis to set the foundation, and then the weekly planning and stuff like that, and then reviewing at the end of the week. Same like a 15-5, right? At the end of the week, I'm reviewing things in my personal life that I wanted to accomplish for the week. Did I accomplish it? Was I the best version of myself? How can I course correct? And constantly doing that, it helps you grow, right? And others feed off that energy. They say people can be successful, not a business. It's the people that makes the business thrive.
Right. And you're one of those people. And
Well,
you are go
to
ahead.
me, success is actually one of our core values I got from one of my mentors is actually an optimized daily experience sustainable over time, right? So that's what we strive for every day is that part of success is having an optimized, sustainable experience on a daily basis. And those through your core values or whatever you have through the morning ritual and stuff like that to just be the best version of yourself every day. It's not easy, but if you're striving towards that, you're going to hit 80% of that, right?
What I'm hearing too, as you say this, is you are as disciplined in your, like you said, your self-care and your mindset and personal development as you are in your business with things like acquisitions and, evaluations and everything like that. You say use those same principles and apply them to yourself.
Correct. Well, they come from self first, then to business, right? You have to grow yourself before you grow your business. So if you don't have discipline with yourself, how do your business have discipline, right?
I hear you. Well, Fuquan, if people would like to learn more about your fund or connect with you further, what's the best way for them to reach out?
Our website, ngcapitalfund.com, we have information there. I like to speak to people and learn about their investment journey. If they partner with us or not, it's just good to make that connection. And basically, they can go to the website and learn more. I'm on LinkedIn as well, Fuquan Bilal, if they want to reach out to me. But they can schedule a call and if they have additional questions by going to the website.
Perfect. And guys, if you're driving or anything, of course, that's all in the show notes for you to grab later. And thank you so much, Fuquan, for coming. And that is a wrap on today's episode of The Freedom Blueprint. If you got value from this conversation, please do me a favor and just subscribe and leave a review wherever you're listening. And then join me again next week for another episode of The Freedom Blueprint.